Howdy. What if you could steal a page from the playbook of one of the greatest investors alive and use it to find high-quality dividend-paying European companies? Well, that's exactly what we're doing today. We're going to run Joel Greenblatt's magic formula screener on the Euronext and London Stock Exchange markets. If you don't know Greenblatt, here's why you should. He ran a hedge fund that put up returns over 40% per year for a decade before he decided he was rich enough and shut it down. He also wrote a book that had the magic formula in it. And what this is a quantitative investing strategy that's beaten the market over long periods using just two metrics, and that's an earnings yield and a return on capital. Well, I'm adding one twist to that screen today, and that's that we're going to filter for companies that also pay a dividend, because here at Compounding Dividends, we like the businesses we own to pay us. So if you're looking to invest like a pro without complicated spreadsheets and crazy formulas, you're in the right place. Let's go ahead and run this screen and see what we find.
We have a new screener on Fiscal. And so the first thing we're going to do, we're going to add the exchanges we want to screen. So for this magic formula screen, I'm going to use the Euronext and the London Stock Exchange. So I'm going to go ahead and just search and add those. Now that we've got our exchanges in, we're going to add some criteria. So the first thing we're going to use is a return on capital employed. I'm going to use the 5-year average to look for something maybe more consistent. We need an earnings yield. And we can fill these in. So for return on capital employed, we want 8%. For earnings yield, let's use 6 as a minimum. So that gives us kind of the basic magic formula criteria, but we're going to add a few more. So we're going to put a market cap in here because we don't want anything teeny tiny. So we'll do $1 billion. And then we're going to add a dividend yield to make sure that we get dividend payers. And for that, I'll use 2%. Once we have those in, we can just hit our Run Screener Filters button. This will do its magic, and we will get 77 results today. So you can see some large companies here: Shell, Total Energies, Diageo. There's a whole group. So this gives us a basis to go on, but this is not yet the magic formula. So what we need to do is to move these into a spreadsheet so we can go ahead and do some filtering and some calculations. We'll filter by earnings yield, and we'll filter by return on capital employed to try and find the cheapest, most high quality companies. So let's move over to the spreadsheet and I will show you how that works. I've already done the work here. I've copied everything over into the spreadsheet, and what I did first, I filtered by return on capital employed and I ranked them. So the highest return on capital employed got a rank of 1, 2, 3, 4. And then I filtered by earnings yield. I did the same thing. So 1, 2, 3, 4, highest to lowest earnings yield. And then this column adds the two together. And so this becomes like golf. The lower the score, the better. So this is filtered by this magic formula rank. And then this is the combination of these two scores. So you can see 1 plus 7 gets us 8 for our top company, 7 plus 11, 18. So this isn't going to be a straight 1, 2, 3, 4. But it is going to give us from highest to lowest the best combination here. And so from this, we can start looking through probably just from top to bottom to look at each one of these companies and see if we find anything interesting. But theoretically, this should be a pretty interesting group to go on. I mean, you can see here the 5-year average ROCEs of our top companies all over 15%. Some attractive dividend yields in here, some really nice earnings yields, and you can see there's some fairly large companies in here. So this is a great place to start some research to potentially find some unknown dividend growers, some great companies that you maybe wouldn't have found otherwise.
Pretty interesting list, right? Some great companies could be hiding in plain sight that are cheap, profitable, and pay you to own them. And if you want the whole list, I did put together a downloadable spreadsheet. You can get it for free in the link in the description below. And if you like this kind of hands-on investing video, give it a thumbs up, tell me in the comments, subscribe, and hit the notification bell. And go ahead and feel free to tell me if there's any other strategies you'd like us to run through the screener at Fiscal. Thanks for watching. We'll see you next time here on Compounding Dividends.